The top business stories live from the Sky News City studio. UK business growth hits a 6-month high in December. Ofgem proposes a one-off adjustment to the energy price cap to help suppliers recover nearly £3 billion in bad debts. Plus, twice world darts champion Gary Anderson on why hitting a 180 at this year's tournament will be helping the fight against prostate cancer. Good morning, this is Business Live with me, Ian King, with a special online edition. We're live on the Sky News app, website and on the Sky News YouTube channel. Business activity in the UK was at its strongest level this month for 6 months, according to a widely followed survey published this morning. The Purchasing Managers Index survey published by S&P Global, in which anything above 50 points to growth and anything below that a contraction, came in at 51.7 for December, up from 50.7 in November. The figure, which was better than expected, points to the fastest rise in private sector business activity since June, and it was led by the services sector, where activity was also at a 6-month high. The figures are a so-called flash estimate based on 85% of survey responses. Well, joining me now to talk about this is Chris Williamson. He's Chief Business Economist at S&P Global Market Intelligence. Chris, very good morning to you. Very encouraging, this. What's driven it?
As you say, in the service sector, it saw a resumption of activity in December, so gathering pace. We had 3 months of decline in the lead up to October, and the last 2 months we've seen an upturn gather some strength. It's still looking pretty weak, but it certainly indicates that the UK is avoiding recession at the moment, which is more than we can say about the Eurozone, where things seem to be turning down. So UK bucking the trend a bit thanks to a stronger service sector.
Yeah, key point that you make there. I mean, we obviously had these surprising October GDP figures earlier in the week, but based on your November and December surveys, you think this means that Q4 we will actually see some expansion?
We could do just about. We're about stagnant level. So while avoiding recession is nothing to write home about. It's interesting as well. It's quite a fragile situation because it seems that a lot of the resumption in service sector activity focused on financial services, which in turn have been buoyed by the expectation that interest rates will start to fall in 2024. We can see things like mortgage rates starting to come down, the fixed-term mortgage rates, as suppliers of those products start to price in some rate hikes in 2024. So the danger here, of course, is that, ironically, the more stronger the data come out like the ones we've got today, the less inclined the Bank of England will be to follow through with those rate hikes. So it's a very sensitive situation we've got here, as you can see.
Yeah, quite so. And it's not all good news. I mean, the manufacturing production sector still continues to contract, according to your survey.
Well, yeah, this is when we talk about lopsided, this is really quite extreme now. The manufacturing sector is really struggling, falling exports. A lot of factories unwinding their inventories. They're getting rid of excess warehouse stocks. They're getting rid of the labour force at a rate that we've not seen for quite a while. Job cuts becoming more prevalent in manufacturing now. That industrial sector is really feeling the pain, and it's not just a UK thing. This is broader globally, but the UK is typically a big exporter. Its manufacturing sector is very susceptible to changing global conditions, and at the moment they're weak. So this is a real drag on the economy at the moment.
And the other thing you picked up on is that, I mean, the labour market still feels as though it's softening.
Indeed, yeah. So manufacturing job losses there, where we had a big upswing in employment earlier in the year, was in the sort of travel, leisure, recreation sector, where the sort of post-pandemic resurgence in those activities buoyed a lot of job creation. That's now starting to fade. So even in the service sector, you're seeing those job losses really start to job losses start to replace job gains. So the employment situation coming down. Now, yeah, that's bad news for the economy. But on the flip side, if you translate what that means into wage negotiating power, it should take some of the heat off the inflation discussion going into 2024.
And Chris, as you mentioned, you've also published Eurozone flash PMI data today. Not a particularly encouraging picture over there.
Yeah, a weak situation there, definitely. All the trends that we're seeing in the UK in terms of that industrial downturn, Germany being really hard hit there, France also. The Eurozone industrial sector is collapsing at a rate really we've not seen since the debt crisis of 2012. But the service sector in the Eurozone, which again, like the UK, had been a key pillar of growth earlier in the year, is now fading. So Eurozone, the data that we've got there signal a GDP fall of 0.2%. Maybe 0.3% in Q4. Now, that comes on the heel of a 0.1% contraction in Q3, which means 2 consecutive quarters of falling output, which is a technical recession. So really quite disappointing news out of the Eurozone today.
Chris, I'm particularly interested in what you just had to say about France. I mean, it's not particularly new news that Germany is struggling, but France, until fairly recently, looked like it was holding its head above water.
Absolutely, yes. It's seeing a steeper downturn than Germany now. Its industrial sector being hit, but its service sector is being particularly hard hit, more so than Germany's. And we're also seeing this in Spain and Italy. So, I mean, Spain and Italy were outperforming as well earlier in the year. And this again was a symptom of this resurgence in the demand for travel tourism that we had this year. We all know all about the airlines and so forth who've done extremely well out of our revived demand to travel with no COVID restrictions and so forth in 2023. The likes of Spain, Italy, and southern France really boomed as a result of that. But it's all starting to come off the boil now as the headwinds of increased cost of living, higher interest rates hit households.
OK, Chris, we have to leave it there. Good to see you this morning. Thanks for spending the time.
Thank you.
Some other business news stories for you now. And the energy regulator, Ofgem, is proposing a one-off adjustment to the price cap on household energy bills in order to help suppliers recover nearly £3 billion in bad debts from customers struggling to pay bills. Ofgem is proposing a one-off increase of £16, equivalent to around £1.33 a month, to be paid by households between April next year and March 2025. The regulator said that the scale of the debt owed to suppliers meant that it was crucial that they had sufficient funding to ensure they can meet the strict regulations Ofgem has in place around how they treat customers facing payment difficulties. The Italian drinks group Campari is buying the Courvoisier cognac brand from the US-Japanese spirits group Beam Suntory for $1.32 billion. It's the biggest deal in the history of Campari, which, apart from Campari and Aperol, also owns brands including Sky Vodka, Wild Turkey Bourbon and Bulldog Gin. Courvoisier, which had been owned by Beam Suntory since 2005, is the 4th largest cognac producer globally. It's been nicknamed Napoleon's cognac because even though it was officially established in 1835, its founder, Emmanuel Courvoisier, supplied the French emperor when he was exiled in St Helena. The second phase of review by NatWest into whether its private banking arm Coutts closed customer accounts over people's political views has found no evidence of discrimination, the bank said today. The independent report by the law firm Travers Smith did, however, find that the bank may have breached financial regulations by failing to tell customers their accounts were being closed down. The lawyers at Travers Smith analysed 84 account closures in the 2 years to the 28th of July, which was a 10% sample of all the relevant cases at that time. And the online wine retailer Naked Wines has reported a widening of half-year losses after its sales fell by a fifth. A pre-tax loss of £9.7 million for the 26 weeks to the 2nd of October, compared with one of just £200,000 in the same period last year. But the company, which last month parted company with its former chief executive following a second profit warning in less than 2 months, insisted it was heading towards generating positive cash flow following a round of cost reductions. Well, last night's gains on Wall Street, during which the Dow Jones Industrial Average hit a record close for the second day running, was followed by mixed trade for stocks in the Asia-Pacific region. As you can see from the bottom left-hand corner of the screen, Shanghai let the side down. That finished lower on reports that China will run a budget deficit equivalent to 3% of GDP next year, hitting hopes of a major fiscal stimulus. In Europe right now, here's the picture. Stocks going into the weekend, slightly mixed there. The IBEX in Madrid to the downside, all the other major indices in positive territory right now. Talking points this morning include Munich Re. The reinsurer is up by 1% in Frankfurt, following an upbeat trading statement. Well, here in London, the FTSE 100 is currently off by nearly 2/3 of 1%, with healthcare stocks weighing on the index, but it remains on course for its third consecutive weekly gain. The biggest percentage faller this morning, there aren't many features to mention, but this is one of them. St James's Place, the wealth manager, is off on a FT report that a wealth manager plans to raise £1 billion from investors to buy out retiring partners. Outside the FTSE 100, again, not a lot of features around this morning, but shares of Trainline are ahead by 14%. They were up 22% at one point, and that's after the UK government dropped plans to launch a centralised rail ticketing retailer, so a bit of less competition for Trainline. On the foreign exchange markets, well, the pound has given a little ground earlier on to the US dollar, but it remains close to a 4-month high against the greenback, and in fact, it is now back in positive territory. Sterling also up 2/5 of 1% against the euro. I suspect that is down to the flash PMI data that we were discussing a little earlier. The euro off by 1/5 of 1% right now against the dollar. After 7 consecutive weeks of losses, the oil price is on course to finish the week higher. A barrel of Brent crude will currently set you back $76.87 a barrel. That's up a little over 1/3 of 1% on the session. Well, joining me this morning is Sophie Lund-Yates, lead equity analyst at Hargreaves Lansdown. Sophie, good to see you this morning. Now, let's start with the oil price, because it's been a really, really extraordinary run, but it looks like it is going to eke out a rare weekly gain.
Hi, good morning. It is. It's, within touching distance of $77 a barrel. And as you were just discussing there, this is going to be the first weekly gain in months, actually. And a large reason for that is there is growing optimism about the strength of the UK's economy, US's economy rather, and that has a huge bearing on oil demand. So there's that side of things playing into the price. But at the same time, as much as this price is upwards when we look at it on a weekly view, a longer term view, there is still quite a lot of subdued activity where the price is concerned. And that is because, unfortunately, overall, the overarching theme is still very much one of uncertainty about the global demand outlook, as well as obviously conflicts in the Middle East, which really kind of send some shivers through the price more broadly as well. So we can't rule out future volatility, but it is certainly moving upwards this week.
Yes. Now, back in the FTSE 100, you've alighted on Pearson. There's a bit of talk that it might be the next UK stock to relocate.
Yes, absolutely. This is a report that suggests that there's a little bit of pressure from an investor to move Pearson's listing off London and over to New York. Now, of course, this isn't guaranteed, but it's definitely worth monitoring. And the reason for that is, as we know, there's been some high-profile losses from the FTSE 100 to the States. And actually, the difference with this one is that actually, when you look at this from an organizational perspective, Pearson does have a lot of weight over in the States, both in terms of at the executive function level, but also from sales. So it definitely is one that needs monitoring. And it wouldn't be the most odd time for a change to take place. Pearson have been through this absolutely huge overhaul on the digital side of things, and a lot of hard work has been done. There's new senior leadership, things like that, and this could be the latest chapter in this kind of clean slate, if you like.
Yeah, I mean, the one thing that I struggle to get to grips with on that basis, Sophie, I mean, a lot of these businesses relocate to the US because they think they'll get a higher valuation and a higher rating from US investors. I mean, that's why Arm Holdings listed over there, for example. But, I mean, Pearson's stock price has, I think it was the best performer in the FTSE 100 last year.
It did have an incredible year last year. And, there is the argument that suggests, there are deeper pools of capital in the US and things like that. But from my perspective, it's a big if. There's no guarantee that this will happen. If it does happen, I think the argument from the firm would probably be more along the lines of a lot of the admin side of things of being listed in the place where a lot of your activity is actually taking place. It can make things like M&A a little bit easier. We don't know if this is a backward signal that maybe that's something that's going to be coming through. But as I say, certainly not guaranteed. And as you say, past performance would suggest that they don't necessarily, they're not in desperate need of those extra pockets in the US. So when you look at their performance last year, absolutely.
Yeah, and briefly, Sophie, if you would please, Naked Wines. I mean, this really is one of the stock market's walking wounded just now.
It is indeed. So they had half years today and they've shown widening losses. But really crucially, the number for me to focus on here is it's all stemming from the fact that revenue is going in the wrong direction. And the big standout is the fact that they are losing repeat customers. And that's a very difficult hole to plug. And cost cuts could only go so far. At some point, demand and revenue is going to need to pick up the slack if those losses are ever going to close.
OK, Sophie, got to leave it there. Good to see you as ever. Have a great weekend. Thank you.
Thank you.
Now, there's a constant debate about which business activities are going to be most disrupted by generative AI. But according to a survey published this week, it's likely to be legal services, with more than 85% of legal operations professionals predicting that most law departments and law firms will be using generative AI substantially during the next 3 years. Well, that study was done by Assertis, an AI business whose platform is used by customers, including Mercedes-Benz and Microsoft, to streamline their contracting processes. Well, joining me now to talk about this is Monish Dada. He's founder and Chief Technology Officer at Assertis. Monish, good to see you this morning. I mean, a lot of your business comes from applying AI solutions to legal contracts. Can we be sure you weren't leading survey participants here?
No, I think it's an interesting question, right? Everybody's affected by generative AI, contracting in particular, in a big way, and people are interested. I think it's very interesting to see how people perceive generative AI. The perception is important because perception translates into action, and that's what the survey shows. It's incredible that people are seeing this technology as a big opportunity and are stepping up. And we are seeing this in our customers, which are global customers, enterprise customers. They're seeing this opportunity as a way to transforming their business, really.
Now, obviously, whenever we talk about AI replacing functions, there's always concern about jobs. How worried should people working in the legal industry be?
It's very interesting. You know, the Industrial Revolution happened right here in the UK, and look at where it took the world. I think it's not about the automation. It's not about taking jobs. It's about how do you make sure that people actually get a big insight into how their business runs, and then make sure that they do more important things than just reviewing contracts. And contracts are messy, right? It's the legal language. It's very hard to understand sometimes. And we're not talking about an NDA here, which is one pager. We're talking about M&A contracts. We're talking about procurement contracts. They run in like 400 pages sometimes. And so you want to make sure that technology allows you to use this to increase the insights that you get in your business and to run your business better. And that's what we do.
I mean, you've got customers all over the world who are using the technology. Which sectors are you seeing taking up your services most rapidly?
I think it's all over the world because this is a horizontal solution, right? So it's healthcare, it is high tech, it is BFSI, financial institutions, banks, it's even IT services. Across the board. So 30 of the top Fortune 100 companies in the world, some of the largest companies in the world, use Assertis, and their business runs on Assertis.
And what's the business model? How do you charge people? Is it on a one-off basis, or do you sell them an annual license? How does it work?
We are an enterprise SaaS company, which means the SaaS service is delivered and the licensing is per user. And we usually have multi-year contracts, and we provide a service that includes implementations, which partners like PwC deliver, and Accenture, they deliver that service to the customer. So that's the model.
And the name of the game really is recurring revenues.
It is, absolutely, absolutely. And that's the mantra, because I think the days of perpetual licenses, the days of on-prem deployments, especially in this area, are completely over. You know, that's history. So
now, earlier this year, in January, I think it was, the German software giant SAP took a minority stake in your business. Where is that going to end up, potentially, that relationship?
No, that's very interesting. So if you look at SAP and if you look at their business, which spans across procurement, they have Fieldglass, which is, you know, people management and services management, CPQ, all of that. The contract is central to this, right? Because the contract has the rules of business. Every dollar in and out, every pound in and out, every rupee in and out of the company has a contract behind it, which means a company like SAP, which actually turns 50 years last year, knows the importance of the contract. And the contract is now playing a big a role in how the business process flows on the procurement side, on the sales side, on the hiring side, on the project management side, on the leasing side, of real estate, for example. So all of these companies, for us, 75% of our customers integrate with SAP. 70% of our customers integrate with Salesforce. So it's very interesting to see that SAP is also looking at this contract as an enterprise object that allows the business to flow better, right? Okay. And that makes it very interesting for them as well to work with us and for us to work with them.
Excellent. Monish, we have to leave it there, I'm afraid. Good to see you this morning. Thank you.
Absolutely. My pleasure. Thank you.
Now, today sees the start of the PDC World Darts Championship at Alexandra Palace in North London. And this year, there will be an even bigger incentive for every player seeking to throw a 180. Because for every maximum thrown during the tournament, the sponsors Paddy Power will be donating £1,000 to Prostate Cancer UK. It's part of a push to get 180,000 darts fans and Paddy Power customers to check their risk of prostate cancer and understand what they can do about it. Well, joining me now from Alexandra Palace are Matt Hobbs, he's Director of Research at Prostate Cancer UK, and Gary Anderson, the twice PDC World Darts Champion. Well done to you both. Good to see you. Matt, let me start with you. How did this partnership come about?
Yeah, so Prostate Cancer UK has been working in sports, in different sports for many years. It's a really great way to get our message and get that health message, the awareness of prostate cancer in front of men where they are. It's one of our first ones. We've done a little bit of stuff in darts before. This is our biggest push into darts to try and get that message out to the darts audience. So we're really grateful to the PDC and Paddy Power for letting us do that.
Will there be reminders during the championship in Ali Pally itself as to what's going on and what you're doing?
There will, yeah. So all of the branding around here, we've got the Prostate Cancer UK branding and a reminder to people to do the thing that we're actually asking them to do is to check their risk of prostate cancer. So men over 50 are at increased risk. Your risk gets higher as you get older. Black men and men with a family history are particularly high risk. We've got a really simple 30-second online tool that helps you work out your own risk, get a bit of information about prostate cancer, work out what to do next. And all of that's all around Ali Pally now.
Gary, is this a cause close to your heart?
Well, it will be. It's I've played darts with a lot of males over a lot of decades, so it's quite effective when you hear that 1 in 8 men can get it, so like I say, we help with Paddy Power, it's we can push it and let everyone realise how bad it is.
Absolutely. I mean, Matt, do you think awareness is improving? I mean, you've got the lapel badge on there, the both of you, which is obviously a pretty common sight now around the UK.
Yeah, I think it is. It's definitely getting better. So I've been at Prostate Cancer UK for 10 years. I think a lot more men and a lot more people in the UK know about prostate cancer. I still think people are shocked at how common it is. So as Gary said, 1 in 8 men will be diagnosed with prostate cancer in their life. It's also really serious. So 12,000 men, more than 12,000 men every year in the UK dying of the disease. And really, it's not just about awareness. It's awareness and then doing something with that awareness. And I think that's what the risk checker tool and campaigns that like the one we'll run during the next few weeks in the darts really help us get that message out, help men understand what they need to do as well.
Absolutely. I mean, I've lost a friend to it, so I know exactly what you're talking about. I mean, and this is the point. It's not easily diagnosed. It's only diagnosed very, very late, isn't it?
Yeah, that's often the case. So early diagnosis is really important. So if you can catch prostate cancer early, it's treatable, it's curable in most cases. Far too many men only catch it late because there are no symptoms. And really, that's why we need men to understand if they're at risk. Don't wait for symptoms because there almost always won't be any. Understand your risk and engage with it before you get any symptoms.
All right, well, Gary, let's talk about the darts for a bit. I mean, you're the last player to have retained the world title. Why is it such a difficult title to defend?
That was a while ago. That was a good 4 or 5 years ago that defended it. It's just, I mean, the sports over the last few years, PDC, Barry Hearn, they've pushed this sport all over the planet. We've got players coming from every continent to play in this game, which is great. It's just getting bigger and bigger. Like I say, darts is just, I don't know when it's going to stop peaking. It just keeps getting up and up and up. The standard of players just getting better and better.
It really is. I mean, I was reading, apparently a quarter of all the tickets that have been sold for the tournament have gone to Germany. Are you worried about any of the German players in particular?
Nah. No, I mean, over the last few years, you know, the European tours picked up, you know, and Germany's A on the list. You know, the amount of European tours that we do across in Germany now, fantastic. You know, the sport's just got absolutely mad. It was Holland before, and then Germany's kind of took over with the amount of darts they have across there, which is great for the sport. You know, it's great for the game.
Yeah, you're seeded 21 this year. How do you fancy your chances? But I think you're fourth favourite with the bookies, aren't you?
Yeah, it's been a bad couple of years, you know. I'm not getting any younger. I'm at that 50 age, so, you know, you've got to do the tests and keep a check on things. But, yeah, it's just one of these things, you know. I've missed a lot of tournaments, but I'm starting to get back into it. You know, I'm enjoying it again, which helps a lot.
Yeah, and if the draw goes as expected, you'll be up against the reigning champion, Michael Smith, at some point.
Yeah, I don't know. Not even looked at the draw. You know, I'm one of these ones, one game at a time. If you get past that first game, you worry about your second game. So if our paths cross at some stage, I'll look forward to it.
Brilliant. And just to talk again about prostate cancer, Gary, have you had yourself checked out?
Not yet. I'm waiting till after this tournament when I've got a bit of time. But yeah, like I say to everyone else, we've got to check. I did have a check years back and I was all right. So fingers crossed the next time. But we've got to say a big thank you to Paddy Power. You know, it's going to cost them a few quid at the end of this, because all the boys at the darts and the girls that are playing, there'll be plenty 180s. So you better get that big stake.
Let's hope so. Matt, roughly how much do you think might be raised from this? Have you got a figure in mind, a target in mind?
Oh, we definitely have. So it's £1,000 for every 180. There were 901 last year, I think. We're hoping for more. So we're hoping to get up to £1 million from Paddy Power, hopefully.
OK. Matt, Gary, lovely to talk to you both. Have a great tournament. Gary, best of luck with tossing the tungsten. And hopefully come back and tell us how much you've raised. Thank you.
Thank you. Cheers.
Well, that's it from me for the time being. There's no afternoon edition of Business Live today, so I'll be back on Monday next at 11:30. Hope very much to see you then. Thanks for joining me today and have a great weekend. Cheerio.